Hey everyone, let me ask you something. At what point does running an STR management business stop being something you can manage on feel and start being something you actually need to control with systems? I talk to operators all the time who have crossed that 50 listing threshold and are starting to feel something is off. Not with the properties necessarily, the operation side is usually fine, but financially, things are starting to get a little murky. Expenses get missed, fees get applied inconsistently. Someone on the team made a payment that was not really authorized. A vendor gets paid twice. An owner gets a statement that does not match the payout. None of these are disasters on their own, but at 50 listings, they add up. At 100, they really compound. And at 200, that is a serious problem. And here's what I want to be clear about: these are not cash flow problems, they're not staffing problems, they're process problems. And the difference between operators who scale cleanly and the ones who descend into chaos almost always comes down to one thing: financial controls. In this video, I'm going to walk through the specific financial controls every STR manager needs once they hit that 50 listing mark. What they are, why they matter at that scale, and how to actually implement them without turning your business into a bureaucracy. So let me start here. What do I actually mean by financial controls? Controls are the processes, rules, and checks you put in place to make sure money moves through your business correctly. And I want to be clear, they're not just about preventing fraud, although they are good at doing that too. They're about accuracy, consistency, and visibility. They're about making sure that at 50 listings, when the volume is too high for any one person to hold in their head, your numbers are still right. At 5 listings, you can eyeball everything. You know every transaction, you know every vendor, every owner. If something looks off, you notice immediately because you're close to all of it. At 50 listings, you can't eyeball anything. The volume simply doesn't allow it. And this is where operators who haven't built the right systems start finding problems after it's too late. Here's what I see happening. They hit 60, 70 listings and start noticing things. Expenses don't match invoices, payments went out for the wrong amount, or a trust account that won't reconcile cleanly no matter how many times someone looks at it. The frustrating thing is, these problems didn't really start at 60 listings. They started at 20 or 30. The volume was just so low that nobody caught them. At 60, the volume makes it impossible to ignore, and it's a lot more expensive to fix. So allow me to walk through the 5 controls that matter the most. First and most important one, separation of duties. This means the person who approves a payment should not be the same person who enters it. The person who compiles owner statements should not be the same person who sends the payments. The person who records expenses shouldn't be the same person who reconciles the bank accounts. I know what you're thinking. My team is not big enough for all that. And that might be true now, but even a small team, you can build meaningful separation. Here's the minimum. Any expense over a defined threshold, say it's $250, requires approval from a designated person, which could be you, before it's processed. Whatever threshold makes sense for your business. But there needs to be one, and it needs to be documented. The person who approves it should not be the same person who then goes into QuickBooks or TopKey or Ramp and processes the payment. And owner statements should be reviewed by someone other than the person who built them before anything goes out. Even a 10-minute look catches errors that a solo reviewer misses every single time. Trust me, it's a lot easier to catch someone else's mistakes than your own. This is something we do here at Keystone. Bookkeepers compile, client lead reviews. You don't need 4 different people to cover all this. 2 people with clearly defined and non-overlapping responsibilities can make it work. And depending on your size, one of those people may have to be you. The key is that no single person has unchecked control over the full financial cycle. Second control is a formal expense approval workflow. At 5 listings, you probably purchased expenses yourself. At 50, that's no longer an option. But if you're not purchasing everything, you need a system for who approves what and under what circumstances. Again, here's a simple framework. Under 250, a team member can approve and process without additional sign-off. Standard supplies, small maintenance items, regular operating expenses. 250 to 1,000 requires approval from a designated team leader or operations manager, or you, before anything moves. Over 1,000 might require owner level approval. At that dollar amount, the owner might have a right to know what's being spent on their property before the invoice is paid. Again, these thresholds can be defined by you, but these are examples. And lastly, you need an emergency exception policy. If a pipe bursts at 11 p.m., you can't wait for an approval chain. Define what constitutes an emergency, who can authorize emergency spending, what the ceiling is, and what the review process looks like after the fact. Put all this in writing, not in someone's memory, in writing, in your handbook, in Notion, or your task management system. And every person who touches expenses needs to know exactly where their authorization stops. Third control, specific to STR property management, that's trust accounting controls. Your trust account holds money on behalf of owners. It's not your money, and because it's not your money, it carries additional legal and compliance responsibilities that your operating account does not. At 50 listings, the trust account is processing significant volume every day, every week, every month. Inflows from multiple platforms, outflows to dozens of owners, management fees, expenses. At that volume, the risk of an error or a shortfall is real. Someone needs to look at the trust account balance regularly, not just at month end. Weekly at minimum, someone should be in there reconciling reservations, making sure cash flow makes sense. If the balance drops unexpectedly between expected payout dates, that's a signal something's wrong, and you want to catch that earlier rather than at month end when the damage is already compounded. Management fees, tech fees, manager income, all of that goes to the operating account once you close your books. Owner funds stay in the trust account until distributions go out. These two pools of money should never be mixed, not even temporarily. That kind of shortcut is how trust shortfalls happen and how compliance problems start. And the trust platform, whether that's VR Trust, your PMS, or something else, needs to reconcile exactly against your accounting software every single month. If they don't match, stop. Don't move forward with statements or payouts until you find the discrepancy. And again, it's important that someone owns this process. Fourth control is vendor management. At 50 listings, you probably have a significant number of vendors. You've got cleaners, maintenance contractors, landscapers, handymen, suppliers. Each one is a financial control risk, if not managed with some structure. Every vendor your business uses should be on a documented approval list. New vendors require approval before any work is ordered or any payment is processed. And please help your accountant out get those W-9s before you pay your vendors. This is not bureaucratic. It prevents unauthorized vendors from getting paid and makes it immediately obvious when an unfamiliar name shows up on a payment run. This doubles as a fraud prevention tool. One of the most common types of fraud is someone creating a fake vendor and routing payments to themselves. Before any vendor's invoice is paid, match it against the original purchase order or approval. Maybe you've got a breezeway task or something in your PMS. Does the amount match what was approved? Does the description match? If not, hold the payment. Don't pay it out and sort it out later. Hold that and resolve the discrepancy first. The more you can train your vendors up front before they get payment, the easier it is to get answers from them. And once a quarter, look at your top vendors by payment volume. Do the amounts look consistent with what you would expect? Any vendor whose invoice frequency or amounts have changed significantly without an obvious reason should get a closer look. Fifth and final control is regular financial reporting. And I include this as a control because financial controls only work if someone's actually reviewing the numbers on a regular schedule. At 50 listings, a basic monthly P&L is not enough on its own. You need a per property P&L, balance sheet, and trust reconciliation every month. If one property's expenses are running significantly higher than comparable properties without an obvious reason, that's a signal. You won't catch that in a combined portfolio P&L. And you need a month-over-month comparison. Revenue, expenses, management fees. How does this month compare to last month and to the same month last year, especially if you're in a seasonal environment? Significant variances without an obvious explanation should always trigger a review. Here's what I want to leave you with. Financial controls are not about distrust, they're about volume. At 50 listings, the volume is too high for any system that relies on memory, habit, or individual judgment to stay accurate. The operators who scale cleanly to 100, 150, 200 listings almost always have these controls in place before they need them, not after a problem forces their hand. If you're approaching 50 listings and haven't built these yet, now's the time. The cost of implementing controls is a fraction of the cost of unwinding a financial problem that built up quietly because they weren't there. If you want help building a financial control framework for your growing STR operation, reach out to us at keystonebookkeepers.com. This is exactly what we help growing operators put in place. Hit like and subscribe for more practical STR finance content every week. See you in the next one.